We've seen some bigger fish to fry this morning, though. We do have tech stocks on the move. Apple and Facebook coming out with some pretty incredible earnings numbers. Both of them beat the street's estimates, and that is the understatement that we've had this morning so far. Apple's blowout quarter was driven by strong iPhone sales. Facebook's big beat was bolstered by higher-priced ads. Let's bring in Sarat Sethi. He's managing partner and portfolio manager at DCLA, also a CNBC contributor. And Sarat, these companies and their performance are really just something to kind of sit back and marvel with this quarter. We were looking for strong numbers, but I don't think anybody was really anticipating the kind of beats we saw last night. What did you think?
I think you're absolutely right, Becky. If you look at Facebook, I mean, talk about firing on all cylinders, not just pure Facebook, but Instagram as well. And then you look deeper, and as you mentioned, ad sales wasn't just increase of ad sales of 12%, but the revenue per ad was up 30%. Then you talk about what's going to go on in the future, and they've been talking a lot about the commercialization of the e-commerce sites too. So that gave investors some confidence in the future cash flows of Facebook. You look at Apple, and every single product line was double-digit growth. And if you look at that and add to it, Apple's margins went from 39% to 42.5%. That was unexpected. So these stocks not only are increasing market share, increasing revenue, but margins are going up. And I think, that's the one thing that we were looking for. Can they sustain margins? Can they sustain their growth rates? And add to it, Apple's increasing their dividend and also buying back shares. So you pretty much checked every box on both those stocks, and that's reflected in the market today. You talk about Apple too. Look at the suppliers. Qualcomm had a blowout quarter too, and expectations for Qualcomm were pretty low. That stock's up 5%, and they were firing on just not the chip side, but also their licensing side, and expectations of another super cycle on 5G. So we've got a few things in place for companies that have growth, and I think investors can be happy with that.
In terms of Apple, not just a stock buyback, $90 billion in stock that they're planning to buy back. That is a massive, massive number. And then you look at what happened with China. There had been so many concerns that maybe China wouldn't be as strong of a market for them because of the tensions between the United States and China. That kind of got blown out of the water. Is there concern that that could step back up? Because we talked a little bit about what President Biden said last night. He also had some pretty harsh words for China in that speech. Is there a concern that China market becomes an issue down the road, or has Apple managed to really kind of maneuver this very well?
I think down the road that could be a concern, especially for companies like Apple. Demand was really strong for this quarter, but then you had really good comps for last year too. But I do think if we have some geopolitical issues, companies that are embedded in there, and we saw that. I mean, I talked about Qualcomm. A couple of years ago, Qualcomm had to pay a huge fine in China. So China can do these things. We just have to be careful. And I do think, Apple's production lines in China could get affected too. Nothing right now to talk about it, but that's definitely an uncertainty down the road. Tesla's going to see that as well. So what we've also seen in the last couple of years is companies have spread their supply chains out of China. Not as fast as they'd want, but you are getting global source products, local source products. And I think that's going to help a lot of multinational companies who aren't just dependent on one area.
Sarat, do you own these two stocks? And both of them are up pretty significantly this morning. Would you buy more at these levels?
So I do own them. I would buy more of Facebook, not Apple right now. I think for the reasons you said, I think Apple's done very well. It's a whole, but Facebook, the sum of the parts of Facebook is what's really exciting about this company, because Instagram has not yet been monetized. WhatsApp has not been monetized. And I think those going forward, and the stock's doing well at the headwinds of the Apple issue in terms of having them, look at the privacy issues and also the overhang of the government looking at it. But Facebook by itself, I think some of the parts, the growth of each one, we're still in the early innings, and it's not as expensive as the others as well. It trades at about 20 times cash flow with a double-digit growth. So that would be one I would add to.
Shepard Smith here. Thanks for watching CNBC on YouTube.